All right, welcome to day two. We're gonna dive a little bit deeper into common versus preferred stocks. Okay, so let's get straight into it. If you didn't see the first segment, make sure you go check out day one. It's important. We covered the basics of investing and the stock market. Okay, so we're back with risk versus reward. Common stocks. They're riskier because dividends aren't guaranteed, and the stock price can be more volatile. However, it offers more upside potential if the company grows. Preferred stocks. Less risky for income seeking investors due to the fixed dividend, but there's limited growth potential compared to common stock. It's more of a stable income investment. So, like I said, for pretty much, we're going to be focusing on common stock because when common stock, that's what we look to invest in because we want the higher return as far as upside potential. Now, common stocks also pay dividends. No, they're not guaranteed, right? They're not guaranteed, but they pay dividends. So as long as if you're looking for dividends, you have to find you a good dividend company that still has a potential to grow. And then preferred stocks wouldn't really matter because you can get the dividend of a good company and the growth of a good company. So that's why we're going to look to focus on common stocks because as long as you pick the right stock, due to a few exceptions, common stocks is usually the better way to go. Okay, what is a preferred stock? Preferred stock is a type of equity that gives shareholders priority over common stockholders when it comes to dividends and in the event of liquidation. Preferred stockholders typically do not have voting rights but have a fixed dividend, meaning they receive regular payouts before a common stockholder. So basically, all the preferred stock is basically just a more safer, quote unquote, investment. You're a little bit more safe when you go into preferred stock, but you have a less of a risk. You have less risk, but you also have less reward in the same way. So, like I said, if we can figure out to max our risk to reward, which is just your risk versus your reward, if we can minimize our risk by choosing the right stocks, but maximize our reward by still doing common stocks or preferred, then we'll really have a good return. The key differences between dividends and priority. Dividends. Common stock dividends can vary, while preferred stocks usually offer a fixed dividend, which provides more predictable income. Priority in liquidation. If a company goes bankrupt, preferred stockholders are paid before common stockholders, making preferred stockholders less risky in this aspect. So companies can go bankrupt, liquidation, whatever the case is. If a company goes bankrupt, whatever the company has over, they'll start paying the preferred stockholders first before the common stockholders, right? So that they're more kind of like insured. Common preferred stockholders are insured better than the common stockholders, right? But like I said, they both pay dividends, even though priority is always given to the preferred. They're preferred before the common stockholders. If that makes sense. So that's all it is. It's just a safer investment. Common stocks. Ideal for investors looking for long-term growth, higher potential returns, and a willing to accept more risk, right? So you have to be willing to accept the fact that, and risk, like we say, the risk of losing money, not volatility, just the risk of losing money, okay? So if you're willing to potentially lose the money you put in, which nobody is, but that's why the stock market is a sophisticated game to say the least. You have to be willing to accept that risk. Now, preferred stocks better suited for investors seeking consistent income, such as retirees and those who want less volatility with a more predictable cash flow. Okay, so like I said, you're getting ready to retire. You don't want your money dropping. You don't want the 100 million that you made to drop down to 80 million. You're scared. You know what I'm saying? I need that 20 million for whatever reason. Because at that point, once you hit after 20 million, I mean, you feel rich at that point. You know what I'm saying? So, but just the person that got $1 million. The average person that got $1 million and saved up, and they don't want to fall $200,000, and that's what preferred stocks use suited for. It's just a better investment for people that don't have time to let the stock play out. And without so that's pretty much it. So that is common stocks versus preferred stocks. Hope y'all enjoyed day two. It was a real brief and a real quick one. I just want y'all to give y'all the difference between the common stock and the preferred stock because even though we prefer common stocks, you know what I'm saying? I had to hit y'all with that one. Even though we prefer common stocks, sometimes for the investor, preferred stock might be for you. So we have to make sure we give you all the options. At the end of the day, we want you to win as best as possible. And everybody has different goals with their future and their money. So we had to give y'all that game. Let's hop into day three. See y'all in the next one.